Let's go. Let's go. Welcome, folks. We had a little summer break, getting back into the thick of it. As I always mention, this is a team sport. Investing is a team sport, and you have to stay in it. It's time in the market is your best friend when it comes to investing. So this is an excellent way to stay on top. Make sure you're ahead of all of the curves that the market throws, and you just have a great community to bounce things off of in terms of investment strategies and particular companies to invest in. So I wanted to get back into the groove of folks assessing their portfolio. The summer is very weird. The market doesn't move much throughout the summer, just based on the fact that a lot of investment bankers are spending all that money they made all year in the Hamptons or in some exotic vacation on somebody's beach house or even their own beach house. So it's important to make sure you're adjusting your portfolio accordingly and still staying on top of the undervalued stocks. And that's why I wanted to focus on. I put a few of them in the chat, but the goal is to dive into them and look at that chart, look at their 3 year chart, and see what it means to be undervalued and compared to the market, where other stocks have grown percentage wise and where these stocks have stayed stagnant. Quality companies too. So I want everybody to take just some time to do that. And I want to call out Sally. I see you're new to the group. Sally, got us on mute.
Yes, I am mute. I guess I am new. I am referred by Natasha Paul.
Oh, great. Natasha stays with it. She stays getting folks in, and
Yeah.
and, and I appreciate that. We took a little hiatus, so folks are slow to getting back into the groove of things. But I wanted to, throughout this summer, just get people in the groove of, as I said from the beginning, just making sure that they're staying on top of discussing stocks. Keeping it on your weekly radar because we all get busy and we all allow our portfolio to do some things that are like when you leave a child untended to, things run amok. So we try to focus on alerts, quality stocks, and really setting your portfolio up to be successful. You're looking at it and you're not just seeing red sometimes or following some of the hot stocks and not catching that wave on when you should sell. So Sally, we appreciate you jumping on. We'll we'll go through the process. And Sally, let me just ask: are there stocks that you have in your portfolio? Where are you investing wise? Are you just getting started? Give me kind of a sense of where you are.
Um, Pretty much like at the beginning, what I did was I was starting out with different stocks. I was doing day trading, and I had, monitored my growth. I had my financial calendar, and then the stock did like a restructure, and my value declined. It went down, and I'm pretty much there just watching the stocks as it revalue, I guess, restructured. And I was looking at the new lows, the new highs. So that's where I am right now, just monitoring where I want to be.
And Sally, if you don't mind, what stock is this that did a restructure? Is it a particular stock that you're referring to?
Not one in particular, but I was watching different ones that were dividend. I would do maybe 10 that I watched. And for an example, when GameStop first came out, I was able to get on it when it was like 40 something dollars. And then, it became what is it, a meme stock.
Yeah.
And then after that, um, I started, after I sold, I started watching other stocks. But when I was doing technical analysis, the behavior wasn't matching up. The stock market was doing something of its own. So I kind of like, became more vigilant in watching what was driving the markets to do what it was doing that was different from my technical analysis. So that's where I am, just basically monitoring and putting down stocks that I would like to look at. For an example, I was looking at Roku, which I had not even paid attention to, but I have it in my home. We use it. And in the last, few months, it took off because we were home basically streaming versus going to the movie. So that's where I am.
Well, good, good. I like that. I mean, and that's where we started as a group. I think um, that process, you learn a lot, figuring out certain stocks to invest in and where to invest in. The only catch is chasing the market. Sometimes, unless you have the computer tools on your side, it's really hard to chase the market, and that's what has happened with some of these meme stocks. But this is part you mentioned in Roku is some of the stocks that we want to focus on. The stocks that you're using, I put inside the chat. Some of them there's hundreds more stocks that we're using. But the goal is to get into the groove of understanding what these stocks are, the quality stocks that you use every day. And that are going to pay dividends no matter what. You can look off top where Amazon is. Amazon is $3,500 a share. It may seem more than the average investor, it may seem so much like an expensive stock, but when you think about that percentage of growth, will Amazon be 5,000 in the next year, 2 years or so? It's pretty much sure where they are and how insulated they are as a company. So it's things like that, just focusing on stocks that have moats, that are insulated, and that we use every day. So thanks for sharing that. I want to start pulling up some of these stocks. So let me see if I can share. And Will, you may have to give me share. Oh no, I have sharing ability. So I want to start pulling up some of these stocks so we can see where Best Buy is. All right, so let me share this really quickly. And pardon me, I have 3 screens, so it's always tricky. Hold on 1 second. That's why. Switching over some of these screens. All right, there we go. There we go. There we go. Okay. All right, can you guys see this?
Yes,
Yeah.
I can see it.
All right, so Best Buy, this is over the course of 5 years. This may not look like a super exciting stock to invest in, but if you see the growth, it's up 249% over the last 5 years, and you see the track way it's going. And companies like this is good to have on your radar because you see right here what happened when COVID hit. It dropped all the way down to 51. That's where it was basically 3 years before that. So when you have things like this on your radar, when people are afraid of the market crashing, you get super excited because you're looking for these dip points. And Best Buy, I think, is undervalued. I think it's stayed the course throughout its competition, like Circuit City. Will, you're very familiar with Circuit City, but it's one of those companies that their earnings have been pretty solid year over year. If you do all of the technical analysis, you'll see where they are as a company. I just think these are companies that are undervalued. but are not performing crazy. You could dig a little deeper to figure out what's going on, like why they're not jumping like some of the other software companies. They are using online shopping in a different manner now. They're doing a lot more, spending a lot more on ads and running promotions. But Best Buy is pretty much a staple around the retail, especially Christmas market. So this is one of the companies I wanted to focus on. Wanted you guys to put that on your alerts. And for me, it's looking at where the baseline of this company. So last year, around this time, it was 107. So it's been pretty volatile, or I say up and down for the last year or so. But this track record of going up is one of those stocks that you hold. And if we're on that long-term game, this is one of those stocks that you really should, I think, pay attention to and have in your portfolio if it's a keeper, if it's something that you're going to use the long term. So that's a lot to choose from, and there are a few that are running a little more aggressive than Best Buy, but this is one of the companies that I wanted you guys to have on your radar. Um, let's look at HP.
One question about Best Buy really quick. Is there any concerns about like it just being in the retail space and retail taking such a big hit in this new age?
Um, I think that's a concern in terms of the long term market. Best Buy is a little bit insulated in to the degree of some of the major money behind the retail space overall. So if you look at the company Best Buy and you understand why it's stayed the course over Circuit City and why it's a staple inside every mall, you'll see that there's major money behind Best Buy because it's almost used as a float for a lot of electronics. So you get a lot of these electronic companies, whether it's Samsung or even Apple, all of the phone companies that are inside Best Buys, these are somewhat insulators of this stock and this specific business model. So so that would be my counter to that. I don't think it's going to fall victim to other companies from a retail standpoint, but I can dig a little deeper because that's a great question. But it's that type of research that really answers those questions for you, the deeper research. So no, I don't think it's going to be insulated like this. And one way you could look at that. So even if you check, like when I'm investing in companies, I'm looking at the CEO. I'm looking at what they've done. Let's see what Corey Barry is about. She's an auditor at Deloitte and Touche. Was she a CEO of a previous company? I don't see that. Relations. So she has a goal to increase the annual revenue to 50 billion. North Carolina, 47 billion. Yeah, I think it's a state of course type of company, and that's why I put it on there. The key factors to get to the root of answering your question, though, and that's something that we certainly can circle back on. But what are some of what are their assets and their debt look like? Where are they investing their money, and what's their revenue look like now? And what does that growth look like year over year? And there's a chart that I want to use to get people very familiar with. It's when you see a company's revenue growth year over year, that shows you how invested in them. When they have like over 20%, that's a safe bet. When it's 50%, that's a great company to be invested in. When it's doing for like Facebook numbers where it's 100% year over year in terms of revenue, that's when you know it's a sure bet to invest. But I could dive a little deeper on. on.
I got muted out for a minute, so I'm not sure if you mentioned this, but another thing to look at would be their competitors. Can you identify some of Best Buy's?
Yeah, so right now it's really Walmart and Amazon that are their competitors. I mean, they're selling the same retail devices that are hits during the high retail seasons. You know, TVs, electronics. I think they win in some of the specific technical devices that people need, that tech people need, whether it's certain cords, certain things that that Walmart is not carrying, and that Amazon you have to wait for. So they still have that inside store experience that people still need. And I don't think that's going to die out for another 20 years where people are not looking to get something very, very quickly. I know corporate folks, they're not ordering stuff if they're on a job shoot and they need something, a specific computer component for, or an adapter. I remember traveling and leaving my adapter home and having to run to Best Buy. So that's where they're insulated, I think, over other companies.
I see one in eBay. We're going to eBay.
Yeah, I want to look at eBay because this is an interesting, same 5 years, it's still showing growth. These are the companies that you want in your portfolio. Over the 5 years, it hasn't done as well as Best Buy, but over the last year, it's done substantially well. Over the last year, it dropped all the way down, but it's still somewhat undervalued. eBay is an undervalued company, and I think you can invest in it and be pretty solid having that as an anchor in your portfolio. And what you also see is that some of the top investors still invest in eBay because it's a sure bet in terms of growth. And even when things dip, it's not dipping crazy. If you can see, even during COVID, it was at 38, and then it dipped down its lowest point to 27. So, and then bounce right back up. So these are undervalued companies that I think when you're looking at substance and quality in your portfolio, these are the companies that you really want to pay attention to.
Sally was mentioning dividend stocks. I know I'm familiar with not the breeze by eBay, but I was kind of interested that you put Cisco on your list. So I was in Cisco last year and I got out of it, but that's a dividend stock, and I think it had a little jump recently. I was interested in what you had to say about Cisco.
Yeah, I think Cisco is just like, it's one of those stocks. I'm gonna go to it now so you can see the chart because the chart speak, but it's one of those stocks that it's not gonna move a lot, but it's gonna be an anchor. And I think more and more as we look at our portfolios, you want them to be like mini mutual funds, so that so if you look at the growth over 5 years, it's up 85%, even less than eBay, but it's been somewhat volatile. And with a stock that provides dividends, this is still a good stock because you are gaining growth as well as getting paid from the dividends. So, and it has, when it comes to technology, business technology, Cisco is winning. The way they deliver for businesses, we use Zoom. A lot of companies use WebEx. That's a Cisco company. It's one of those anchor stocks from a technology standpoint. Let's see. I wanted to see their growth. Let me see. And what's their let me see what's their their revenue is 48 billion and their gross profit is 31 billion. Quarterly earnings, this is the growth that I was talking about. It's under 20%. It's a major company, so they're not going to be doing crazy numbers. But if that growth is positive, you're in the right direction. Operating cash we have 14 billion. Yeah, all these technical analysis for a company like Cisco, that's a juggernaut, is pretty much good to use as a it's good to use as kind of like a case study for major companies and understanding what some of these technical analysis mean. But this is a company that I think is still undervalued. You know, it's only $56, and you can have it in your portfolio for 5 years down the line. You know, if it doubles, you're in a great sense. You're in a great space. Anything on that list of undervalued companies that you for Domino's? Oh my goodness. Before I ask that question, I gotta jump to Domino's because Domino's is somewhat of a sleeper. Domino's is $517 right now. So let's see that 5-year chart. So yeah, Domino's is over 5 years progressively growing. The last year after wait, where is COVID? So COVID, it did a little dip during COVID, but then it just stayed the course. So, and this is why we do this, because if you're looking at some of these companies and you see Domino's when it took this dip early this year, February 1st, the market was a little shaky. It dropped down to $346. Now, that's close to where any company that's strong like this, that's close to where it dropped past COVID. You're supposed to have alerts on it and ready to jump on this. Like it's in the food sector, so you know people are ordering more. So this was set up to be successful. Domino's was really set up to be successful for the era that we're in, and it's staying the course. It's a growth stock. It's constantly moving up. So these are one of those stocks. I mean, it's $516. There may be a few stocks that are on your radar before it, but it's a great stock to have on your radar and count. I would actually put an alert for a dip, and I would look for this support line right here when it reaches peak in September. We see what happens during the end of the year. You know what happens with this stock and with the market in entirety, and look at this. But what I was going to ask before I jumped to Domino's, because I was still surprised by it, and it was one of the things that I wish I would have had on my radar. But is there anything out of these stocks? Dish, CVS, Ulta Beauty. Ulta Beauty is another one that. All right, so this is why I said Ulta Beauty could be undervalued, because um, let's see, last year around this time it was 349, and it bounced back from COVID pretty steadily. So it was dropped all the way down to 175. But it's set to for growth. It's set for growth. It's a strong company in terms of their earnings. The next earnings date is in the next 10 days. So we get a chance to see where they are and if they're staying on target with the rest of their earnings. Let me look at what they've done. So this is one of my top things. Sally, you might not know this being new, but this is one of the things I look at when I'm looking for growth stocks. The 200-day moving average is 328. The 50-day moving average is higher than the 200-day moving average, and then the current price is higher than the 50-day moving average. So that means over the course of half the year, this stock is progressively growing. and then you check the earnings and the operating cash flow and any specific things around the business itself that's showing that this company is going in the right direction. But this is another
This chart, Terrell, this chart is on Yahoo Finance only.
Yahoo Finance is kind of the baseline. You could look at really any stock, whether it's Seeking Alpha or any platform that you have, TD Ameritrade. You can look at the 5-year chart. You can go on that specific platform and see the charts, and then skip to the 5-year, 1 year, and do your research according to what you're looking for.
But they don't all give the same like breakdown as far as 50-day moving average. Yahoo Finance seems to be more in depth.
Yeah, Yahoo Finance gives all the specifics. So when you go to Yahoo Finance and you look at the statistics, and an easy thing to do is to just understand, what these mean, these top valuations, because it really tell one thing about stocks, and this is what real technical people, this is what one of my investor guys that you guys are familiar, you hear me talk about him, Neville, a lot. He tells me it's not just the growth of the stock, but it's also how many shares are moving, like how much is the value. So if you look at this company, Ultra Beauty, the volume over the last 3 months on average is 600, almost 650,000 shares on a daily basis is moving, and that's more than the last 10 days. So as I said, this is the summer, so a lot of volume slows down a bit in the summer, but it's interesting to look at some of these components, and when the more and more you do it, especially with the companies that you're super interested in, your radar is just up different. You'll really get a sense of what these what these numbers mean and how does it apply to some of these companies, especially the solid ones like this, these companies that are really great companies.
Is the value how they determine the price? I mean, as far as how is the value based on the number of shares that are being purchased, and is that how the price is determined? Because I always wonder how they get from $100 to $300 to $500 so quickly.
Absolutely. So you look at you times the share price by the number of shares in total, and you get the valuation. That's what is considered the market cap up here. You get the entire market cap of that company, and then it's supply and demand. You have big hedge funds that are buying into some of these stocks at a certain time, and they're selling. So when they start to sell, it deflates the price a bit. And there's other factors. As I said, 60% of people that are trading by computers, using computer simulated trading, and they're trading in and out of stocks. So it affects the overall price. But to get to the root of your question, is the total. You can times this by the total number of shares, and you'll get to know the market cap of a company.
Interesting.
And that's why when they say the S&P 500, those companies are worth based on their share price. They're worth the certain amount. When you see Tesla is now worth $1 trillion because the stock price is what it is, and you times it by the number of shares they have available for the public to purchase. All right, I wanted to check out AMD too. And then, Will, before I jump off these undervalued stocks, I want to look at the stocks in your the tech stocks inside your grid that you're sitting through, because that's a gem that I hope folks are paying attention to, and I'm not, and I hope they are, but that's a gem to have on this chat, a solid chart where folks uses algorithms to depict the sell price and the stop price for NASDAQ tech stocks. So you can see AMD now is considered to be undervalued according to Yahoo Finance. You see the growth chart over 5 years where it's at, and that's almost 1,000%. It was $13 5 years ago. the volume is outrageous. The volume is 100,000. It was 100,000 this week, 100 million rather shares, be it, and then 57 is the average, 57 million shares. I want to do more research on AMD because I know there's a lot going on with microchips and that whole sector. I had a company that I thought for sure was going to SCON is the name of it, SCON, and I thought for sure was going to jump off. It was a penny stock, but it didn't do much. But I know MU is on here. This was one of your stocks, Will, and that's a perfect segue. I don't know what's going on with MU. It's at 70. It was $80 when it was on that. When it was at its high. I don't know what's going on with MU. This is one of those things where it's weird that the market is not adding up. This is supposed to be growth. I've done all of the research on MU, and this isn't even one of your algorithms. So Will, I'd like to tag you to talk about Micron for a second. It being on your algorithm and where it's at. Not if you've done any research, but just kind of your overall perspective on the company, if you have, or if you can share anything on it.
I don't on Micron itself, but I know the chip sector as a whole seems always to move in unison. I've been following Applied Materials. That's ticker symbol AMAT, I believe, and Qualcomm. Those are the two that I was following at some point within the last year, and they seem all to move at if all is up, if one is up, all is up.
Mm-hmm.
So that seems like what the chip sector is doing. But it's a sector that's we spoke on before. It's always going to be in high demand. Everything has chips in it. Cars, computers, everything. So it's something that's not going to go out of style. If you find one that you like, you can definitely just put money in it, wait for it to go down, buy more. They always seem to recover.
I want to do some research on it.
I've been in Applied Materials, and right now it's down. And I'm looking to get a little.
Got it. And Qualcomm is pretty much on that same growth. It's been flat for a few years, and then it's just starting to jump up. So, but I still am kind of lost as to Micron being like on the downward turn. Like it's interesting where it was and where it is now, 70. So it's gonna be interesting to see what happens with Micron. NVIDIA,
like I said, everything moves. So Applied Materials is up to like 145. It's down to 120 in the 120s now. So that Micron losing $10 a share sounds right on par with what everything else is doing.
NVIDIA is the only outlier. NVIDIA is the only one that's been just moving, just savagely moving. They just did a split. It was like almost $800 a share. So they just did a split, but they're still just progressively going up. So, in these chip sectors, it's good to have that as a cornerstone in your portfolio from a tech standpoint. But doing your due diligence and your figuring out which one is going to be the best. So you said Applied Sciences and MU. What else was on that algorithm?
Applied Materials, MU, NVIDIA. That was a few months ago though. We sold out of that. Those.
Got it. All right. Any other questions on the undervalued stocks? And kind of the point that I wanted to get over there is make sure you're understanding, you're doing those comparisons to your question, Taisha, the difference between these companies and where they are and why they're undervalued, and looking at, and it's easy to look at their chart and see their growth and compare it to some of their counterparts and some of the top players in that sector overall. So it's kind of an easy, the chart tells you, the charts don't lie. They tell you really what's going on with that stock. So if we're switching to companies we use every day, and this is a cornerstone, especially for folks that is investing, I think a lot of times you're investing in companies that you really don't know about, and it may be just a great company, and it's you can learn that from the chart or just from the history of that company and what they're doing and all the speculation around it. But if you look at, I mean, consumer debt overall, I think this was something that, you have to be diligent on in terms of investing almost strongly in a stock. I mean, consumer debt in this country is not going anywhere. And companies like Visa and, of course, MasterCard and Amex, even Discover did very well since the pandemic. Like if you look at the chart, let me look at the chart. Let's go to the chart first. And this is one of those things where you talk about, I don't like this chart. You talk about common sense investing. I mean, you look at consumer debt, people are losing their jobs, people are spending, they're ordering online, they're using their credit cards more. It's one of those things where let me just scroll down a little bit. So, no, I don't like this chart. I'm gonna go to, so you look at, now this is one of those charts that's just, it's just like some of the charts that I showed you that are undervalued. This is the charts that you want in your portfolio, because you can hold them for 5 years and you're going to see your portfolio constantly going up, constantly. And even when this dropped down to 146, and it's one of those points where even during these dips, like we should be like, everyone should have alerts on with some of the top consumer debt companies, Visa, MasterCard, on what these dips look like. And an easy way to see that in the chart, if you look at the 1 year chart, is, and I tried to get into this in technicals, I really have to download the software so I can show you guys this Fibonacci line that kind of rides the dips of some of these stocks. This was 193 back earlier in January. The next dip was 208. This dip was 220. Right now it's at 232, and its high was 250. So, and this is a stock that's constantly going up. So you can ask yourself, like, am I going to play this real? Am I going to get into the long-term game and switch over my whole portfolio and invest in some of these stocks? This is the way to do it. Look at some of these stocks that you can invest. You can throw your whole portfolio, an investor that's looking at just consumer debt and look at the way people spend. You can be solid bet on knowing that Visa is not going out of business anytime soon. So it's companies like this that are insulated, that you wouldn't say they're a moat, because they do have competitors like Discover, like MasterCard, but their business model is based on consumer debt, and that is not going anywhere anytime soon. So I wanted to focus on, go ahead.
Oh, I was gonna say, now, with that understanding and, research sometimes coming after, the initial buy of a stock like that, because you do understand that. I know you dial in sometimes, but when they're when you're at a beginner status, which I shouldn't be since it's been a year, but when you are and you want to keep on dialing in, I know you wait for those drops, but what if it's a steady uprise or uptick of that stock? What's your best strategy or method that you could recommend to dial in?
So this is a great strategy, and that was a great timely question, because right now, just last month, this was 250. I don't know what the factors that shot it up to that, but it's down to 232 now. So if you think about the way you spend in increments investing in a stock. If you're going to spend $1,000 in a stock that you're going to hold long term, I would say spend 50% of it now. So you get it right now during this dip, and you capture this dip that's taking place right now with Visa, and you can get it at half price, and then you monitor it. Once it's in your portfolio, now you can monitor it, but not just monitor it by eye, putting an alert on it. So your next buy will be back when it gets, you know, past this resistance level. So like right in between here, like 245. So now you're still getting the stock lower than where it was, and you're catching that growth at the best time. So right now, I'd say 25 to 50% of what you're gonna buy, spend in a stock like this. I'm not telling you to buy Visa per se, but a stock like this, you're catching that dip and you're spending only a portion of it, and then setting those alerts to purchase the rest when it starts to tick back up. And even if it ticks back down, it's a stock that you're gonna hold for, you know, 3 to 5 years. So you want the stock, you're looking for the stock to be, you know, $300 in the next year or so. And let's talk about doom and gloom. Let's talk about prepping your portfolio so that when you have these stocks and the market does do a tip, you're not doing like everybody and panicking and selling everything. You're being strategic on these type of stocks, the stocks that are going to recover no matter what. So if you look at the max of Visa, if you look at Visa over the course since 2009, when it was $16, this is what you're looking at. And these are the stocks that we use every day, that are implemented into our house, that makes investing so much easier. When I learned this, it was like, oh, damn, I could just put my whole portfolio on cruise control and still have fun with the percentage of money that I want to play with, but get into stocks that I know is going to constantly grow and just make me money year after year. So this is what you're looking at. So let's go to one of the other stocks on that list. Visa, PayPal. PayPal is an interesting stock, and this is one of the things that I really need to pull some money aside. And I think PayPal is going in an interesting space. They're starting to take payments. They're getting into the processing game. You see over the past 5 years, they are up 600%. That's great for a stock. That's 6 times in your money, and it's PayPal. It's a vehicle that is shit. Is one of, I mean, if you're just going with the everything he touches gold, Elon Musk. This is what his claim to fame. This is where he made all his money on PayPal. Well, his money to start Tesla. It was the birth seed of it. But I think the beauty of this company is that they're getting into a whole new business model and new stream. So this is just like you asked a question about Visa. If you're looking at when to get in on this stock, I mean, last March it was 220, and that's when the market did a little dip, and then it did another little dip at 240 in May. It'd be interesting to set an alert. I would set an alert for 260 if I didn't feel comfortable getting into it at this price. But if you're looking at the long-term aspect of it, you're still looking at this chart right here. So you're not worrying about it in the last few years. You're looking at this type of growth. And this is where PayPal is moving. And it's not going reverse. This is the growth charts. All these stocks that I put into the chat are quality stocks that you should put alerts on and really start looking at the 5-year charts and see where you want to get into and start moving some of your portfolio over to some of these quality stocks. Yeah, I own PayPal. I own Exxon. I own all the stuff that you pay into every day, Visa, MasterCard. And then it becomes easy. This investing thing becomes a lot easier.
Terrell? Terrell?
Yes.
Okay, I have a question. So this is in regard to the Moderna stock, right? So I did really well on the Moderna stock. My question is, I'm wondering if is this a stock you think I should hold? Because based off of the chart, it looks like it's going to continue to go up. But do you think I should take some of the profit or just let it sit?
I think unless you have something to do with it, you should take some of the profit, but I think you should put a stop in it. Moderna is a great stock, one, because that algorithm I was talking about earlier
Yeah.
on Will's algorithm, so it gives you, it takes the math out of it for you.
I can't hear you. You're cutting up.
It
Hello?
has the perfect stop on it.
Yeah.
Will sent that through, so I could tell you right now. But yeah, Moderna's stop is 248. So, and
Okay.
that's a little bit lower than I would say. I mean, it's 350. That's an older one too. So to stop now, so you can put a stop at 300 really, because
Okay.
you know, and based on where you purchased it at, really set yourself up to so you're not losing any money and you're taking all of those gains.
Yeah, because I got it at $90.
Oh my goodness.
Yeah, it's crazy.
I brought in it at 120 and sold at 180 and just was going for the ride. I didn't know they were going to be on this super wave.
Yeah,
that's great.
Yeah, I did really good with this stock. Okay, so you're saying put a stop, an alert on it.
Yes, absolutely.
Okay.
Absolutely.
Okay, but you're saying put a stop and alert on it at 300, but it exceeded 300.
Well, that's so that it sells the entire portion of it in case it dips, in case it has one of those, you know.
Oh, okay. Okay.
Yeah, that's just a protection for it. But I think you're in a space now where you have, you know, that's 400% growth.
It's actually a 300% growth. I had 300% growth.
Oh yeah, 300%. Yeah, if you were at 90,
so
you're in a great space. You're in an excellent space because, damn, it was up to 480 and it just dropped down.
Yeah, and now it's at Wait.
It's at 389.
Exactly.
389.
389.78 to be exact.
Yeah. So I'm
okay.
Yeah, I'm definitely gonna put a stock, but if you're gonna do something with that money, I say take it out and and if you want to put it in something that's, you know, if you want to put that money in a dividend stock to make it more safer, or put it in Google or Amazon.
Yeah, that's what I was thinking about, taking it out and putting it in Microsoft, because you know Microsoft is my baby.
Microsoft, absolutely.
Yeah.
This stock, that's one of the stocks that's on that list. And I'm gonna put that on right now as you mentioned that.
Yeah.
So let's look at Microsoft. Yeah, these are these charts. I guess over and over, but these are the companies that you want to be invested in. Over the 5 years, it's looking like 400% growth, constantly going up, no crazy zigzags. These are the stocks that you want to invest in and go hard in investing. And really, really be diligent on having stocks that you're not chasing the market and you're jumping in on some of these stocks. So I'm gonna leave it open because the reason why I put some of these stocks in is to remind you guys and have put alerts on some of these stocks and look at those that are undervalued. The main way to see that is to look at their competitors and look at this chart. But I want to open it up. We have about 5 minutes left. I want to open it up to see if anybody had any questions specifically about charts. I wanted to mention cryptocurrency is starting to come back a bit now. So if you were in that wave and you caught the downturn of the last wave, make sure you're in the beginning wave right now. Ethereum is something that is just like these Microsoft stocks. It's like Bitcoin. It's one of those stocks that you should invest in with the effort to hold on to for some time. Ethereum just jumped to 3,000. Yes, 3,300. So it did that little, it was going crazy when all of the cryptos currently hit 4,000, and then it went down to 1,800. And so this is where you got to be on those waves. So I wanted to mention cryptocurrency. If you were on that wave back in early May, late April, where the Dogecoin live was going crazy, this is the time to start, hedging your bets on Ethereum and even Bitcoin. So I wanted folks I wanted to throw that out and make sure we're still our resident expert Vanessa is definitely got to get her on. So we're speaking about crypto on a regular basis. They're about to pass that law where the tax implications around crypto are starting to seep into our taxes. Before, there's a lot of people that made money on crypto that didn't really have to pay some of the taxes that you pay on regular companies, so regular stocks. So so it's interesting to see where that is going from a cryptocurrency. But I'll open it up there. Sally, I want to tag you for a second. This was your first meeting, and Natasha, thanks for inviting Sally. Sally, I want to make sure we're giving you what you need on a weekly basis. What we do is talk specific trending topics and specific stocks, but the goal here is to get people, keep it on their radar. As I said, I want to know if you had any questions before we start to trail off.
No, thanks for making me more aware of what I should do with the undervalued stock and to put alerts on them. So as you were talking and showing the charts, I was taking notes and I would put that in my to-do list. But the questions that I have, I'm going to write down and ask in the next section, so
Okay.
it won't, take so much time.
Okay. All right. Good stuff. Well, thank you. Thank you for joining us. And I think we started this with a lot of folks that were just getting started with investing, and we have some folks that are in their own lane. I had a few folks that came on board, but I think the goal here is kind of learn the way you learn, but challenge us to make sure that we're making this as interactive and engaging as possible. There's so much to learn about the stocks, and it's a test of how you trade and what your own tolerance is for trading.
The next session, will you jump into stash? Because I'm very new with stash.
I haven't invested in stash. I think it's a great tool for folks that are just getting started. I can open up an account just for that simple fact. It's a great way to kind of get an insight on different stocks, but I haven't started with stash. And I know it's a great tool, just like Robinhood, very user friendly, and it gets you in the mode of investing. But the biggest selling point of that is the fractional shares for stocks. So it's great for purchasing fractional shares. I think
Stop. Go finish it. Can I interject there? Charlene, just like Terrell said, stash is a great way to start out. However, you should have other platforms, especially if you want to do like what he was discussing today with stop and alerts. Because with stash, you cannot do that. You can buy fractional shares. You can learn about difference. You can buy into stocks that you may not be able to buy a full stock, which is the fractional shares, but you don't have as much control over the stock as if you have like an Ameritrade or E-Trade, if that was helpful.
Thank you, very helpful. So what is the stash party?
The stash party, I'm sorry, Terrell, go ahead if you want to say.
No, go ahead. I mean, you're a part of
okay. Yeah.
I'm going to show them to speak on it more.
So Stash Party is cool because what it does is once you're a member of Stash, it gives you free stocks, but it only gives you a fraction of that stock. And it's really up to you if you want to invest more once you've acquired that stock. and they give you good stock. So once you get that stock, you can look into the business model and see if it's a business that you want to be one of the owners.
Right.
And
So if I understand you correctly, if let's say I started I accepted a stash party invitation and I
Yeah.
get this free stock and I'm only getting a piece of it, a part of the stock, and I see that it's doing well and I want to invest in the full one, I would go to my Ameritrade account and purchase the stock off the back. That's what you're saying, Todd?
Yes, you can do that, because remember what I said, you have more control in your Ameritrade. So you could put the stop and loss, you could put the stop and loss alerts. You can do so much more with your Ameritrade versus the stash.
Got it. Thank you.
You're welcome.
good stuff. And what I can attest to, Natasha, that offline conversation about Natasha account, she did some quality stocks like Lowe's, and it's a great way to do kind of this whole session of on top of some of those quality stocks, because they do give you some quality stocks. So some good stuff. I'll pause, guys. Getting back into the groove of it. I want to grow as much as possible. Make sure that we are tapping our folks that are close to us in terms of investing. Will was just over my house last week teasing me how much I love talking about investing, but I think it's so imperative that we spread the word and make sure that we are empowering ourselves. So on that note, thank you guys for your time.
I agree.
Engage during the chat, and make sure you're setting those alerts and those companies that I put in, looking at some of those companies particularly because they're not going anywhere. And you've seen those charts. So I showed you the proof. They're just progressively growing up.
Yeah.
Yeah.
Thank you, Terrell.
This is great, Terrell.
Let's keep it going. All right, guys. Love you guys.
Yes, love you too. Have a good day. Have a good night, guys.
Thank you.
Bye, guys. Thank you for coming.
Session.
All right.
Welcome,
Take care,
Charlie.
everybody.
Yes. Bye.
Later.